If you've ever wondered why most traders blow up their accounts, it's not just because trading is hard. It's because they start with the wrong foundation. They jump in without a clear strategy, and before they even know it, their account's gone. This video right here claims to teach beginners to start day trading the right way, but does it really work? Today, I'm breaking this video down step by step, exposing the common pitfalls that wreck new traders. And we're going to reveal the key things that this video gets right and what's dangerously missing. Because in a game where even a 1% edge can be the difference between winning and losing, one bad piece of advice could cost you everything. This is Day Trading for Beginners from Peachy Investor.
Step number one is finding a stockbroker. All-time favorite, and the one I'm going to go over quickly with you guys, is Thinkorswim. But I also want to list these others because you guys might have different goals than I did starting out. For me, I wanted to start with a broker that was going to give me the most growing room in the future. So I knew I wasn't going to start off as an advanced trader, but when I eventually got there, I wanted to be on the platform that allowed me to become the trader I wanted to be. Now, a lot of people will start with something like Robinhood because it's super beginner friendly.
And I just want to say a lot of people are using prop firms, including myself. So if you want a link to the prop firm that I use, hit the link in the description. And prop firms are actually an easier way to start because with prop firms, you don't have to trade all of your own money. You just pay the monthly fee and you start the challenge and you either pass or you don't, and that fee could be less than $100. So let's outline this whole strategy. As you guys know, my goal is to make these videos 10 times more valuable for you, so you're 10 times more likely to take something from the video and apply it to get more of this. So the first one is choosing the right broker. Now we're gonna change this and say using the right broker or prop firm, okay? Because a prop firm is a newer way of doing it, but in a lot of ways, it's a better way of doing it, okay? So just keep in mind that.
I definitely have used Robinhood over the years and I still use it as my lotto account. It is extremely beginner friendly. So if you are intimidated by something like Thinkorswim like I show you today, then Robinhood might be a great place for you to start. It will be very limiting once you grow. So if you decided to become a full-time day trader, this really isn't realistic. I would probably say more of a swing trader could start out with Robinhood or a long-term investor. But if you are looking to become a serious day trader down the line, I highly recommend some more advanced software like Thinkorswim. Webull and Robinhood are kind of the same category. They do have a desktop app now on Webull, and I did a tutorial on that one as well. I put Interactive Brokers up here because I know that some people like that platform, or it's their only option if they're out of the US, or maybe they want to get more into advanced high quick fill orders for options trading. That's really, really up there. So you might want to check that one out. But for me, I personally like Thinkorswim, and that's the one we're about to dive into. And once you get all set up and signed up, it will look like this. So this is the Thinkorswim software.
Okay, and I want to show you the other platform that I use, okay? This is TradingView, and I talk about this on the channel. It's my favorite platform. So I use a combination of two tools, right? One tool is my prop firm, but the prop firm works with TradingView, okay? So there's two tools that I use, and the way that you do that is you open up TradingView, link in the description for all these things, and you just log in to your prop firm through Tradovate, okay? Now you can log in to TradeStation and other ones as well. Like you can even log into Webull and Interactive Brokers and some of the ones that she's mentioning. So the reason why I like TradingView as a platform is because I do all my charting in here and I've got all my lines and stuff here, right? Like this all-time high. And so if I want to place a trade on a different platform, then I just log out of one and I can log into the other one, right? Like I can place my trade in Tradovate through my prop firm, then I can log out, and I also have a TradeStation account with a, personal, a live account with my own money in there. So I could like log out of that one, and then I could log into this one. So this is like a control panel that plugs into all these different platforms. So that's why I like TradingView, and that's why I recommend it. And again, link in the description if you want to check it out for yourself.
It is so advanced when it comes to being able to do technical analysis, study charts, and do advanced order brackets, which are all things that if you are a beginner might sound like foreign language to you, and that is something you can definitely learn as you go. But just know if you are looking to take this seriously and become more advanced down the line, I think it is worth the learning curve that Thinkorswim can be in the very beginning.
And guys, if you want me to do a full tutorial on TradingView, put a note in the comments and I will do that if there's enough people interested.
But if you decide to go with something more beginner friendly like Robinhood or even Webull, I completely understand that. I think the biggest thing is just finding a platform that you feel confident enough to move forward with. Whatever that looks like for you, by all means, do what fits you best.
1000%. That's one of the best parts about trading. You have a million ways to make it work for you, okay? So the broker you pick affects your execution speed, your fees, and the tools that are available, okay? So for that reason, I choose TradingView because then it doesn't matter what broker I use. I've got all the tools I need right there. And she mentioned her popular choices and I mentioned mine. So the next step, step 2, is going to be picking a simple strategy. And notice we've got 3, 4, 5 steps here, and then we'll get to some final takeaways at the end. But let's get to step 2.
Over 7 years, which definitely says something. Step number 2 is once you pick your stockbroker, you open your account, you need to get very, very familiar with that software before you move to step number 2. And step number 2 is just basically understanding what TA is, or technical analysis, and then picking a basic strategy that you fully understand how to execute. And so, for example, technical analysis in simple terms is just going to analyze a stock chart, which we just looked at, and you're trying to use previous data or data on the chart to determine if the trend is bullish or bearish. And this is just a very simple definition. You can get really, really advanced when it comes to technical analysis, but we're going to start with the basics because this is a beginner-friendly video, and we're going to talk about trend.
Awesome. Okay. And most traders that are beginning should start with trends because that's the easiest and best place to start. So when we get to step 2, as we're on now, we're picking a simple strategy, and your key focus as a beginner should be avoiding information overload. Now, how do you do that? You master one simple strategy first, okay? So she's saying, can you tell the difference between bearishness and bullishness? For example, here's a chart right now, okay? It's Wednesday. We're seeing here that the price is going, well, let's see. Pop quiz. Is this chart right here, if we just circle out this, is this bullish or bearish? Tell me in the comments right now. Now, as you guys know, I'm not here for your entertainment. I'm here to help you learn something so that you can apply something from this video and make some more of this today. So tell me right now in the comments, is this bullish or bearish? Now, there's all these different strategies, but step 1 is being able to look at a chart when you see it doing this and say, is this bullish or bearish? So tell me in the comments right now, bullish or bearish. This is the most basic form of TA. Essentially, can you look at a chart and say, is it going up or is it going down? Okay, so bullish or bearish, tell me right now in the comments.
So bullish trend, the stock is making higher lows. Bearish trend would be the stock is making lower highs. And I'm going to show you an example of each. Okay, say the stock market opens and you see the stock do something like this. It opens, it makes a high, it pulls back, and then it starts to make another high. So this would be considered a bullish uptrend because we have a low of day, we have a high of day, we then came back to print another low of day, and we started to move up. So we are forming higher lows.
Yes, so that's a bull trend. This is also called a channel, right? Because if you look at it, it's like a channel kind of moving in a diagonal direction, okay? So that's a bull trend, and specifically it's called a bull channel. And why is that? Because this part is the breakout, and once you get the pullback, now we're in a channel, okay? So that's how that works. So this part is the breakout, and then this part is the pullback. And once you get the breakout, add the pullback. Now we're in a channel. You guys got it? And you guys got the correct answer. Okay, so shout out to Craig. Yes, you got the right answer. Okay, in the comments, you guys nailed it, right? This is a bullish trend. And why is that? So if we take our low and we mark it out, this is a prior low, right? And then notice what happened here. This was the next low. And notice that this low is higher than this low. So that means higher lows, okay? That's part 1 of a bull trend. And then you got this high, and then there was this high, and then there was this high. So you got the lows getting higher. That means up, bullish. And you've got the highs getting higher. That also means up, bullish. So nice work, guys. Yes, you got it.
If this low did not take out this one, that is a bullish uptrend. It would look something like this, and then we're continuing to the upside. So this is a bullish trend to the upside, aka the stock is increasing in value. We are making higher lows here. Now, the opposite of that would look like a bearish trend, or where we were making lower highs. Now, bearish trend could look like the stock opens, it makes a high of day, we pull back, we take out the low of day, we then try to attempt a new high of day, we fail, and now we are making lower highs. So it's the opposite. We are making lower highs and we are forming a trend to the downside.
Now, I like actual charts. She's drawing on the chart. And to me, this is silly, because how does this help you when what you're actually going to see when you actually have to trade is this, okay? But you guys tell me in the comments right now, do you prefer drawings like this, or do you prefer actual chart examples? I personally think actual chart examples are so much better, because this is what you're going to have to train your eyes to recognize. And I don't know about you, but when I see this and then I see this, to me, that does not translate. But you guys tell me, do you prefer drawings, actual charts? Which is your preference?
Okay, the stock is decreasing in value, and you can make money both ways as long as you know how to do that. Now let's go back to the bullish uptrend, and we're just going to use a simple strategy example of what it would look like to buy the dip on a bullish uptrend. We're going to use AMD as a quick example because I know we just played this one on Friday. So I want to show you guys what a
Okay, so you guys are saying in the chat, definitely charts, definitely charts. Okay, so I agree with you. So I'm glad you guys are on the same page there, right? It's got to be the charts, right?
basic trend line looks like in real stock market world, and not fake little lines on my chart. So AMD
Exactly.
is actually in a trend channel, and all that means is you can see that we are making higher lows, so we are in an uptrend. So this is the bottom trend line to this channel. And then I did a top trend line here, which creates the channel. And it's basically me just matching the highs.
Okay, so let me do the same thing she's doing. And if you have TradingView pulled up, you can do the same thing on your chart as well, right? Again, we are not here for entertainment. We're here to learn something or get better at what we already know, okay? So we've got our channel here. Now, remember I said the first part of a trend is a breakout. That's the part where it just goes straight up. That's here, okay? Then you've got a pullback. That's right there. Once you get the breakout, you add the pullback. Now you've got a channel. So once you've got a channel, what you can do then is start drawing your channel lines. And by the way, if you want to check out my tutorial, I have a 3-step process for how to draw trend lines, which I recommend you watch right now. I'll link it up in the description. But either way, you connect a line and you just want to connect those lows, right? And you just kind of, you can extend it out like that. And then step 2 is to draw the top of the channel line. And all you do is you click that line and you hit the option key. You hit the command key in TradingView and it does a perfect parallel line. You see that? And then you just drag it so it's a best fit. And notice we can kind of drag it and just kind of play with it so we can get it to touch. And we want it to touch at least twice. Notice, touch here, touch here, touch here, touch here. We're good. You guys got it? Cool.
So as we are moving up, we have created a channel off of these trend lines. And remember, trends are the basic foundation of technical analysis. You have to be able to spot trend in order to have a strategy in order to be successful consistently with trading. You can't just randomly go in without a strategy, without understanding trend, and just execute trades and hope to be consistent. It really doesn't work out that way. You might get lucky, but eventually it will stop working. So
that's how you lose all your money.
For this trend channel, you can see that we were in a bullish uptrend because we were making higher lows. So a simple strategy of mine that I wish I would have just started with in the beginning and mastered this before I moved on into the fancier things, because it's all about foundational work. You have to have your solid foundation before you move on to advanced techniques. If you don't get the basics, you're not going to get more advanced things. So if you are playing a bullish uptrend and you're looking for the simple strategy of buying the dip off the trend line, and so as long as we are making higher lows, a buying the dip off of trend line could look like I buy stock or calls, depending on if you're looking to day trade stock or options. Then once this trend line proves that we are holding, I can purchase stock or calls to then try to see if we can hit the top resistance of that trend line. And you can see that happened 1, 2, 3, And then right here, we tried a fourth time and eventually we failed this channel. So the trend broke, therefore your strategy might not be working as well. However, if you're looking at big picture, we still are in a technical uptrend because this low did not get taken out by this dip. And so as long as we are continuing to make...
So I just want to point something out here, okay? Then notice, we broke the line, okay? And we're breaking the line. See, if the line's here, right? On her chart, that would be if the price came down and broke the bottom of the channel line. So if we extended this out, and at some point later today, we came up here and then came down here, and then we broke down here, right? That's what she's saying is happening here. You guys see that? Okay. So what she's saying is, okay, you're breaking that trend line. So you would think, oh, if you break the line, that means the trend is done, but it's not. What you notice is that the trend went down a little bit past that line, and then it actually stayed above this prior low, and then it continued upwards. Okay. So when this happens, it doesn't mean that that trend is over. It just means that that line is getting tested. So we're going to see what happens when the price comes into this area. So don't be rigid when you think about trend lines. Notice that you can think of these as areas as opposed to very narrow lines.
Make higher lows, then you can buy the dip until trend break. And that's a very simple way to start. There are tons of strategies. I go really, really advanced into a lot of my scalping strategies when it comes to options in my 8-week program. But just for you guys to start basic, I would definitely master trend line bounces before you move into something more advanced. Let's go over one more example. Tesla is a very wild stock, but
okay, now before we get into this next example, pop quiz. You know I like these pop quizzes, so I want you to answer this pop quiz to show me that you came here to learn something and not just be entertained. So here's your pop quiz, okay? What does she say is the foundation of technical analysis? Volume, trends, or Fibonacci? What are we saying so far in this video is the foundation of technical analysis, or TA? Volume, trend identification, or Fibonacci? Which one is it? Tell me in the comments right now.
I will say it was making a trend line here that you could have played off of. So trend lines can be very subjective, which is where it can get kind of sticky. But as long as you have a general idea of where trend is, you should be okay. And remember, trend is created depending if we are in a bullish trend or bearish trend. So since we are forming higher lows, we are in a bullish trend to the upside. Therefore, every time that we get close, but we don't break this previous low, that could be a dip buy entry to then sell on the next pop. And so you can see we hit trend here, 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 and here. We were holding and making higher lows. So each dip was a potential buying opportunity to the upside.
Okay, and we're getting some answers in the chat. Craig, you got it. Trends, Ninja, you got it. All right, everyone's getting it. Excellent. You guys are paying attention. You guys are listening. Nice work.
That was on the 1-minute chart, so I do want to switch over to the 5-minute really quick to show you an example of what it looks like when trend breaks. So you can see if we draw a simple trend line here, we've got 1 hit, 2 hit, 3 hit. We broke trend, and then now we are going down to a bearish trend until we find a new low, and then we start to form higher lows.
Okay, now notice this example is very different than the example before it, okay? The example before it, notice this was the example before, and the trend line was here. We went below the trend line slightly, and then we came back up, okay? But notice the example we're looking at now is very different because here was the trend line, right? And now we came down to test that trend line and we broke below that trend line. Then we broke even further below that trend line. Then we came up and then we broke even further below that trend line and we broke below all of these prior lows. Okay. So this is a very different example. Before we showed you a break of that trend line and then a continuation up. Here we're seeing a break of the trend line and a trend reversal down. Okay. So very different, and you need to be able to identify these patterns to be able to know where the probability is pointing to so that you can have your trade be on the right side of the trade and do what the smart money's doing.
So there are different time frames that you can trade on. Again, this is where it gets more advanced. But if you can just start to recognize patterns when it comes to trend and drawing those basic trend lines and seeing if you can start to recognize this simple strategy of, okay, if I'm looking for dip buys on a bullish trend, what am I looking for? And just train your brain to only look for that strategy until you master it and then start to layer on top of it. So we just went over the basics of TA, technical analysis, aka trend, and we were looking at bullish trend versus bearish trend. We also went over what it looks like when a stock is making higher lows versus making lower highs. And if you are going to use a simple strategy like buying the dip, then you are looking for those trend lines to form and hold higher lows for you to then buy the dip.
Great strategy, buying the dip, right? You're just buying a pullback, okay? So we got to step one, which is picking a simple strategy. And one of the best things to learn is how to know whether we're in a bullish uptrend, which are higher highs and higher lows, or whether we're in a bearish downtrend, which are lower lows, okay? Lower highs and lower lows, right? You put those two together. And the example is buying the dip, which is a great strategy. That's just entering on a pullback, okay? So now let's get to mastering technical analysis. And we just talked about trend lines. You got to be able to draw those. Next is going to be support and resistance, and then candlestick patterns and being able to spot reversals, which we've already started to talk to you about, okay?
Trend breaks, you're no longer able to play that trend. If you are looking to play a bullish trend, you have to understand when that trend is going against you and no longer valid. So step number 3, and this will be the last one to wrap this up, is create a small account challenge for yourself and create rules. So we talked about picking a strategy, right? Buying the dip, waiting for that higher low to form to play off bullish trend. This is just an example, guys. You can do whatever you want, as always. This is not financial advice. This is just if I went and had to start over, where would I start to just not overwhelm myself? So buying the dip, that could be a place to start just to get in the swing of things. And then paper trade. So before you even start a small account challenge, we need to go over what it looks like to paper trade. And this can be a combination of step 2 and 3 if you want to include paper trading in that. But basically all it is back testing your edge. You're using a trading simulator to practice your strategy with fake money, aka Monopoly Man. So the software that I just showed you, Thinkorswim by TD Ameritrade, if you go to the top right-hand corner and click on demand, this will allow you to paper trade with fake money. So if you want to go in and see what would happen if you bought 100 shares of a stock at a certain price, you can do that with fake money and not risk anything to just make sure that what you're doing is working.
Now, this is really important, okay? You practice executing on a paper trading account. Very important, okay? And the way you do that, let me show you how to do that in TradingView, because that's what I use, right? So you go to the bottom here, and it's going to be in the bottom left-hand corner. You guys see this? It says paper trading. You just click that, and what it'll do is it'll log you into a fake account. You just click connect, and this will give you paper money to play with, okay? So this works literally exactly the same as a regular account. So you'll get used to how to trade and executing a trade. And that's what you want to do before you actually start trading real money. And I did this for a full year, okay, before I actually started trading actual money.
This is the step almost every single person who fails has skipped. And I can say that with confidence because I have taught over 400 people, and I know a lot of them who ended up failing in the beginning did not take the time to learn a strategy, did not take the time to practice their strategy, and they also definitely didn't take the time to set up rules to prevent themselves from blowing accounts.
Okay, so a lot of beginners don't even paper trade. Think of how different that makes me. I paper traded for a year. Guys, a year. Every single morning, 5 days a week for a year. That's the kind of commitment that this takes, okay? So if you're not even willing to paper trade, give up right now or raise your commitment, okay? And also, I want to point out that this is not like you pass a phase and then you're done. A lot of traders will go back to paper trading if they take a step away from the market. Let's say you take a few weeks off or a month off and you come back. A lot of traders will go back to paper trading for a few days just to get back into the swing of things and get their brain reassociated, reacquainted with what's happening, kind of back into the flow, if that makes sense, right? It is like a bike. You know, once you learn how to ride it, you never forget, but you do get rusty, right? So paper trading is an asset for you. It's one of the best possible assets that you can have. And that's what I strongly recommend. And you know, you can do whatever you want to do, but if you have the opportunity to prove to yourself that you can execute your strategy well, that's a good idea in my opinion.
So hence why I decided to make this video for you guys. I hope you find it helpful. But for example, if you are day trading and you want to get started and you found that strategy that makes sense to you and you come in here with fake money, this is where you prove to yourself that it works. So this is where you go and you take trades. You start to train yourself to look for those setups, and you can go up here in the top right hand corner, click the drop down menu, and you can go back to any day or time. You can change it to any stock ticker you want. And like I said, I have a full tutorial on Thinkorswim that could help with this, but basically make sure you are paper trading to prove whatever you're doing, whether it's dip buying on a bullish trend or whatever strategy you pick, actually works before you put in real money. So we just talked about paper trading after you pick a strategy, and that leads—
Notice the steps. Pick a strategy, step 1, step 2, paper trade, and then step 3, create rules.
Leads me to the actual last step, which is step 3, and that is create rules. And this exclude emotions part right here is so key. By creating rules, you are in fact helping to exclude your emotions from trading. A lot of times people who don't set rules have sporadic trading with no strategy, and that's where they get really emotional and lose a lot of money because they don't have any rules in place.
And that's not trading, that's gambling. That's not what we're interested here. It's not what we're interested in here at all. We're interested in trading and doing something that has a mathematical probability to work. And for that, you need rules.
So just like a diet in a training program, I think 20% exercise, 80% diet for you to actually see results. Same thing with trading. I think 20% strategy, 80% execution. You could have the best strategy in the world, but if you don't have rules that force you to follow that strategy, you're going to fail. So set rules and practice them with play money. Real money, in fact, does equal real emotions. And since I can't give you guys step-by-step rules to follow because I really don't know what strategy you're gonna pick and what risk management plan you're going to choose, all of those key factors, I can just tell you that me personally, I have a few rules that I always try to follow. One of those big rules for me personally is I do not trade the first 30 minutes of the day at open because it's the most volatile time. And if I am trading, I'm scalping only with very light size. So I typically save my sized trades for later in the day. And there are several reasons for that. It works for me based off of my strategy. But
I do the same thing. So that's a strong recommendation for all traders is to sit on your hands for the first 30 minutes of the day. It's a really easy way to increase your profitability because the chance of reversals of any trade you take in the first 30 minutes reversing on you is extremely high.
But I really don't like trading the first 30 minutes because it is the most volatile time, but it's also the most chaotic, and it's the easiest time for you to get overwhelmed and stopped out. Another rule of mine is, yes, I do like to trade penny stocks, but I do not trade options on penny stocks unless it's considered a lotto.
Thank you, original content creator. I appreciate you.
I really like to stick to my watch list for my large caps on options. And so since I'm an options trader, but I also trade penny stocks, I do keep them separate and I have different strategies for each. So if you do decide to play options on something like a penny stock, for example, then just be very careful with doing that. Make sure they have a ton of volume and liquidity, and make sure that your strategy can actually be used on them, because a lot of times technical analysis isn't the best thing to use on small caps or penny stocks. And one more rule, we'll go back to SPY, is if you go to the trade tab over here, it will show you the options chain. And my rules, again, are more geared towards option trading because that's what I do. But I like to stay away from 0 DTEs unless they are a scalp or lotto. And so if you are just getting started day trading and you decide to trade options, just be very careful with those short-term expiration dates. And that wraps it up for my day trading guide for—
All right, awesome. So we've got our steps. Let's make sure that you guys got all the steps locked in, okay? So the first one is to choose the right broker or prop firm. If you want my recommendation for that, hit the link in the description and you can see the one that I use. Like I said, you can start for less than $100, which is better actually than putting your own money into an account because you can lose all of it, especially if you're a beginner. So that's why I like prop firms. Step 2 is picking a simple strategy. Notice you need to be able to tell how the market is in a bullish uptrend or how the market is in a bearish downtrend. And like we said, you can draw these channel lines, right? And you can see that the chart follows these lines pretty thoroughly, okay? And if you notice, once you see a pattern, you can start seeing patterns inside of patterns. Oh my God, are you kidding me? It's like trading inception. Notice we've got a channel pattern, but check it out. We also have a micro channel pattern. Oh, that's cool, right? Look, there's a little channel inside that channel, right? Got a channel here. And then we've got a greater channel there. So that's cool. So what you start to see is your eyes just actually notice these things without even really trying. Notice how effortless it is for me. And that's just practice, right? So you practice being able to see these things on a chart, just starting with the basics, guys. You just start with the basics and you go from there. And yes, one of the best strategies to start with is a buy the dip, which is that would be a pullback buy. So you have to be able to tell what's a trend, what's a pullback, and you're going to enter after the pullback for that trend to continue. That would be a step 2, picking a simple strategy. Step 3, master technical analysis. Now, what is that? You're using past price data to predict future movements. And I would say to forecast, okay? Forecast future movements, which is not exactly a prediction. It's a forecast based on math. It's a mathematical calculation. You guys notice when you type into your iPhone that it predicts what word you're going to say next, and often it gets it right and you can just tap it. You don't have to type that whole word. It's the same technology we're using, but to be able to make money in trading, it's using, like your iPhone uses, the words and all the possibilities that could come next. And it's just using math to be able to forecast what comes next. It's the same thing with TA. That's how TA works. It's probabilities, guys. Then the key concepts we talked about were trend lines. Support and resistance is another key one to really learn. We didn't cover that much in this video, but that's a really important one. And I talk about that in my video on how to draw trend lines. Okay, so I recommend you watch that one right after this. And then the next key concept was candlestick patterns and spotting those reversals. And we gave you some examples, right? So for example, this is a continuation. We said that this is a breakout, right? Because the price went straight up, right? I'm talking about from here to here, okay? And then we said this is a pullback, right? Because the price pulls back. That's a reversal. And then once you have the breakout, you add the pullback, then your entry would be right here. And what do we call this? This is trend continuation. Okay, so simple pattern. And obviously, it's a lot easier to see after the fact. It's a lot harder to be able to identify in real time. And that's why you move to step 4, which is paper trading. And paper trading will give you the chance to practice identifying these things in real time, A, and then B, executing them in real time, which takes practice. Oh my God, does that take practice? I still practice that. All traders are still practicing that. Okay, even the best traders in the game, their execution is rarely, if ever, perfect. So it takes constant and never-ending improvement. You got to be practicing. It doesn't matter how good you are or how new you are. Get used to practicing. And if you do it on a paper trading account, it will help you immensely. So I do recommend that because you will prevent blowing up your account before proving your strategy works. Now notice, you have to prove that your strategy works to who? Do you think you have to prove your strategy works to someone else? To like your mom and your dad or like your friends that think day trading's a joke? No, you have to prove that it works to your brain. Your brain has to be able to see that it works. Whether or not you have backtesting data, your brain still has to be able to see it working in real time. And that's the real benefit of paper trading because your brain likes proof, not promises. Your brain, to believe in something, and to be able to trust it likes proof, not promises. And so that's why paper trading is amazing because it solves that problem. And how do you do it? Use that simulated trading. And as I showed you in TradingView, you just go to the bottom and you log into that paper trading account right there and you can trade. And when you do that, the only thing I want to add there is don't say, oh, this is just paper money. Oh, this is fake money. Take it as seriously as you would your own money. That's what I always did. And I think that's a very smart way to do it because then you're treating it as the same seriousness. Step 5, setting trading rules and avoiding emotional trading. You got to have rules. If you don't have your rules, and I don't mean rules in your head, I mean rules that you have actually officially formally written down. So here's a few example rules that are really good. Me and her have these in common. Avoid trading the first 30 minutes. Some people avoid the first 15. I would say even avoiding the first hour is a very good idea. There's some amazing trades that happen after the first hour that the market's open. Notice I said after the first hour. Rule 2 is stick to your strategy. Don't take random trades. This is when you go on tilt and really bad things happen. So what you're going to do here with rule 2 is start developing your discipline and start getting better and better and stronger at doing what you said you are going to do, which is the reliable person that you know that you can count on. Practice that in trading, practice that in life, and people will love you. You'll love yourself too. Rule number 3, control the risk. Always use stop losses and the correct position sizing. You need to use a stop loss. You would not go racing in a race car without putting your seatbelt on. Stop loss is no different. Rule number 4, track your trades and journal them. That keeps you accountable. I'm giving you some bonuses here that weren't even covered in the video because that's how much Brendy loves you. Now, final takeaways. Start small. Don't rush into real money until you have consistency. Again, another easy way to deal with this is use prop firms. You can start with less than $100. That's not a huge thing to risk. Stay disciplined. Your rules help keep your emotions out of trading. Now, I would say you can't keep your emotions out of trading. So I'm going to change this and I'm going to say the rules help you manage emotions. And I'm going to say in trading, because you can't get your emotions out of trading as long as you're a human being. Keep learning. Master the basics before adding complexity. So that is the trading guide for beginners. If you liked this video and you want more information on my strategy, go to tradesbybren.com and I will share with you a free downloadable PDF where I will reveal my 3 favorite trades, including the 3 patterns that I look for, how I set my profit target, how I set my stop loss to control my risk, and I also include a 15-minute detailed training where I walk you through real examples on the chart just like this, just like you guys said that you liked, okay? And next, I recommend you watch my video on how to trade and draw with trend lines. That's coming up next. Thank you so much for watching. I'll see you in the next one. Brendy loves ya.